Donald Trump, a name synonymous with wealth and opulence, faced a different reality in 2025. His financial empire, once seemingly invincible, showed cracks. Trump's net worth took a hit, plummeting by $500 million in just 1 year. Several factors contributed to this decline. His media company, Trump Media and Technology Group, saw its share price tumble by 8%. This drop reflected a loss of investor confidence in the wake of controversial business decisions. Real estate, a cornerstone of Trump's wealth, also suffered. The value of his properties in New York and San Francisco dwindled, resulting in a $90 million loss. The once booming real estate market had cooled, leaving Trump exposed. Adding to his financial woes was the volatile cryptocurrency market. Trump's investments in Ethereum took a nosedive, plummeting by 45%. This sharp decline underscored the risks associated with the unpredictable world of digital currencies. While Trump's personal finances dwindled, the US national debt soared to a staggering $34 trillion. This massive sum represented a significant increase from previous years, raising concerns about the country's long-term economic stability. Trump's policies played a role in this fiscal expansion. His post-COVID-19 stimulus package, while intended to boost the economy, added billions to the national debt. The package, though necessary in the eyes of many, came with a hefty price tag. Furthermore, his trade wars and tariff policies created economic uncertainty, hindering growth and reducing government revenue. These policies, aimed at protecting American jobs, had unintended consequences for the national debt. The combination of increased spending and reduced revenue created a perfect storm for escalating debt. The situation raised questions about the sustainability of Trump's economic approach and its long-term implications for the nation. Trump's tariff policies, a hallmark of his economic agenda, sent shockwaves through global markets. His decision to impose tariffs on goods from China, a key trading partner, sparked a trade war with far-reaching consequences. American companies caught in the crossfire faced retaliatory tariffs on their exports to China. These tariffs, exceeding 100% in some cases, made American products less competitive and hurt businesses. The trade war fueled uncertainty and volatility in global markets. Stock markets around the world, from Wall Street to Hong Kong, experienced significant declines. The Hang Seng Index, a key indicator of the Asian market, plummeted by 13%. Investor confidence, crucial for economic growth, waned as businesses and individuals became wary of the unpredictable trade environment. The trade war's ripple effects were felt far beyond the borders of the US and China. The confluence of Trump's declining personal wealth and the escalating national debt raised eyebrows and fueled speculation. Some observers questioned whether there was a link between his personal financial interests and his policy decisions. While no concrete evidence emerged to support these claims, the circumstantial evidence provided ample fodder for speculation. Trump's business empire, heavily reliant on real estate and vulnerable to economic downturns, stood to benefit from certain policy decisions. For instance, his tax cuts, while benefiting wealthy Americans like himself, contributed to the growing national debt. Similarly, his deregulation efforts, while intended to boost business, could potentially benefit his own companies at the expense of the environment or consumer protections. The lack of transparency surrounding Trump's personal finances further fueled suspicions. Without a clear understanding of his financial holdings and debts, it was difficult to definitively rule out any potential conflicts of interest. Section 5. Uncertain future risks and prospects for Trump and the economy. As 2025 unfolded, both Trump's personal finances and the broader US economy faced an uncertain future. The risks posed by his declining wealth, the mounting national debt, and the ongoing trade war loomed large. A key risk for Trump was the continued erosion of investor confidence. His unpredictable policy decisions and penchant for trade conflicts made investors wary of putting their money in his businesses or the US economy in general. The escalating national debt also posed a significant risk to the US economy. As the debt grew, so too did the cost of servicing it, diverting funds from essential government programs and potentially leading to higher taxes or inflation. The ongoing trade war with China, with no end in sight, threatened to further damage the global economy. Continued tariffs and retaliatory measures could disrupt supply chains, increase prices for consumers, and hinder economic growth. Section 6. The global impact of Trump's economic policies. Trump's economic policies, particularly his tariff wars, extended far beyond the borders of the United States. They sent ripples through the global economy, impacting trade, investment, and economic growth in various countries. The trade war with China, a major player in the global economy, created uncertainty and volatility in international markets. Businesses around the world faced disruptions to their supply chains, leading to delays, shortages, and increased costs. Developing countries, heavily reliant on trade with China and the United States, were particularly vulnerable to the negative consequences of the trade war. Reduced demand for their exports and volatile commodity prices threatened their economic stability. Moreover, Trump's withdrawal from international agreements such as the Trans-Pacific Partnership weakened global trade alliances and undermined efforts to promote free and fair trade. This unilateral approach to trade policy created friction with long-standing allies and eroded trust in the United States as a reliable trading partner. Section 7. Public perception and political implications. The state of the US economy under Trump's policies and his own financial dealings became a subject of intense public scrutiny and debate. Public opinion was sharply divided, reflecting the polarization that characterized American politics during his tenure. Supporters praised Trump's tax cuts and deregulation efforts, arguing that they boosted the economy and created jobs. They pointed to periods of economic growth and low unemployment as evidence of his successful policies. Critics, however, argued that these gains were short-lived and came at the expense of long-term economic stability. They pointed to the ballooning national debt, rising income inequality, and the trade war's negative impact on businesses and consumers. The public's perception of Trump's handling of the economy became a key issue in the 2024 presidential election. His opponents seized on economic anxieties, promising alternative approaches to address the challenges facing the nation. Section 8. Potential for conflict of interest and abuse of power. The intersection of Trump's personal business interests and his role as president raised concerns about potential conflicts of interest and abuse of power. Critics argued that his policies often seemed designed to benefit his own businesses at the expense of the public good. For example, his decision to hold international summits at his own resorts, despite ethical concerns, raised questions about whether he was using his position for personal gain. These actions blurred the lines between his private businesses and his public responsibilities. Furthermore, his administration's rollback of environmental regulations while benefiting industries in which he had investments sparked accusations that he was prioritizing his personal wealth over the environment and public health. The lack of transparency surrounding Trump's financial dealings made it difficult to assess the extent of these potential conflicts of interest. His refusal to release his tax returns, breaking with decades of presidential precedent, fueled suspicions and calls for greater accountability. Section 9. Conclusion. Navigating the uncertain waters of Trump's economic legacy. Donald Trump's economic legacy is a complex and contested one, marked by both periods of economic growth and significant challenges. His policies, driven by a blend of populism and nationalism, left a lasting impact on the US economy and its place in the world. While his supporters point to tax cuts, deregulation, and a strong stock market as evidence of his success, critics argue that these gains were unsustainable and came at the cost of increasing inequality, a ballooning national debt, and strained global relations. The long-term consequences of his economic policies, particularly his trade wars and disregard for international agreements, remain to be seen. The global economy, already grappling with the challenges of climate change and technological disruption, must now navigate the uncertainties unleashed by his unconventional approach. As the world moves on from the Trump era, understanding the complexities of his economic legacy is crucial for charting a path toward a more stable, equitable, and sustainable future. Only time will tell whether his policies will be remembered as a success or a cautionary tale.